Hey everyone, welcome back to Corporate Decoder, the place where we untangle the financial web and find out if companies are just spinning a yarn. Today, we're diving into a filing from Generation Income Properties Incorporated. It looks like they've been busy making some financial adjustments, and trust me, it's not quite as boring as it sounds. Before we get this party started, if you love getting the real story behind these corporate documents, make sure you hit that subscribe button, and hey, we've got a fantastic community over on Discord. The link is in the description below, so hop on over and join the conversation. Alright, so what we have here is a Form 8K filing. Think of this as a company's urgent bulletin to the public. It is for reporting big, important stuff that happens between their regular, more detailed reports. The most interesting part of this particular filing is that it tells us about a pretty key agreement they just made. Generation Income Properties, or GIP, has signed an amendment, which is basically a change to an existing loan agreement. This loan is with an entity called Brown Family Enterprises LLC. Now, what's the big deal? They've agreed to push back the deadline, the maturity date for this loan. It was originally set to be paid back sooner, but now the new due date is the 15th of December 2025. This isn't a brand new loan. It is an adjustment to an existing one, and it suggests they needed a little more breathing room. When a company amends a loan like this, it often signals a few things. It could mean they are anticipating some cash flow coming in later than expected, or perhaps they are working to restructure their finances to better manage upcoming obligations. It's a common practice, but the devil is in the details. We want to know why they needed this extension. Is it a sign of temporary cash flow issues or part of a larger strategic financial move? The filing tells us the specific date this agreement was made, the 27th of October 2025. It's important that they are transparent about these kinds of changes, as they can impact how investors view the company's financial stability. Now let's touch on the company's stock. GIP has common stock trading under the ticker symbol GIPRA. They also have warrants, which are like options to buy stock. Trading under GIPRA, both of these are listed on the Nasdaq Stock Market LLC. This tells us they are a publicly traded company and their shares are available for anyone to buy and sell. The fact that they have warrants suggests there might be potential for future dilution of common stock. If those warrants are exercised, which is something shareholders always keep an eye on. Interestingly, Generation Income Properties has checked the box indicating they are an emerging growth company. This classification comes with certain regulatory benefits, including the ability to delay adopting new accounting standards. This can be a strategic choice for newer companies looking to manage reporting burdens. But it also means that their financial statements might not reflect the very latest accounting rules compared to more established companies. They have also elected not to use the extended transition period for complying with new or revised financial accounting standards. This means they are adopting them sooner rather than later, which is generally seen as a positive step for transparency. The filing also lists the exhibits. The most significant one here is Exhibit 10.1, which is the actual First Amendment to Secured Promissory Note. This is the document that contains all the nitty-gritty details of the loan extension. If you are really digging deep, you'd want to read this document. It would tell you precisely the terms, any new interest rates, any new covenants, or any other conditions tied to this revised loan. Now, no corporate filing is complete without a section on forward-looking statements. This is basically the company's way of saying, hey, we might say some stuff that sounds like a prediction about the future, but it's risky and things could turn out very differently. They are clearly outlining that their actual results could be affected by various risks and uncertainties. This includes things like general economic conditions, market fluctuations, and interest rate changes. It's a standard legal disclaimer, but it's a constant reminder that the future is never certain in the business world. They mention that investors should refer to their other filings, like their annual report on Form 10K, for a more detailed look at these risks. Finally, we have the signatures section. This is where the company's authorized representatives officially sign off on the filing. In this case, it's signed by David Sobelman, the Chief Executive Officer, and dated the 31st of October 2025. This signifies that the company leadership has reviewed and approved the information presented in this 8K. It's the final official stamp of approval. So what's the big takeaway here? Generation Income Properties is navigating its financial landscape by adjusting a key loan agreement. This extension to December 2025 gives them more time to manage their obligations. While this isn't necessarily a sign of immediate distress, it does highlight the importance of closely monitoring their financial health and cash flow moving forward. As an emerging growth company, they are balancing growth with financial management, a delicate act for any business. What does all this mean for the company's direction? Well, the adjustment on the loan suggests they are proactively managing their debt. This gives them a little room to breathe, which could be crucial for executing their business strategy without immediate financial pressure. However, the reason behind needing this extension is the key question. Is it a minor bump or a sign of a larger challenge? We need to see how they manage this extended deadline and whether upcoming financials show improved stability or continued strain. A notable risk here is the general economic climate. If the economy sours or interest rates climb further, it could put more pressure on companies like JIP that are managing debt. The opportunity lies in their ability to use this extended time effectively to strengthen their financial position and perhaps secure better terms or generate more revenue. In conclusion, Generation Income Properties is in a period of financial adjustment. This 8K filing provides a glimpse into their debt management strategy, but always worth watching to see how it plays out. Alright, that's our quick decode of this JIP filing. What are your thoughts on companies adjusting their loan terms? Do you see it as a positive sign of smart management or a potential red flag? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up. It really helps us out. And don't forget to subscribe for more in-depth corporate insights. Wednesday love to see you over in our Discord community. The link is in the description. Thanks for tuning in, and we'll catch you in the next one.